What's going on? It's Ryan from happytrader.io here. Wanted to go over the market move yesterday on Wednesday, December 20th. Today is Thursday, December 21st, 2023. And we had this huge sell off that I did a video about yesterday. And Happy Trader was able to pick it up. And that's our indicator. So you can see, like, we had our sell signal and then we had our downtrend. But I mean, this was like a huge intraday dump. And I looked into this a little bit because I felt compelled to actually make a video about it. Normally, I don't get kind of riled up over stock moves and stuff like that. And what they're attributing this move to is really the zero DTE option. So I wanted to take the opportunity to explain how zero DTE options, like what they look like, how they work. You can see today, I just wanted to touch on the market. We are buying back and kind of filling the gap, so to speak. And we did get an uptrend signal followed by a nice handily move to the north. So that's always nice to see that our indicator is doing its job. And if you like and subscribe and look at the other videos on the channel, you can see some of the back testing results that we have for some of these tickers. It's pretty extraordinary. So what they're attributing this to is the zero DT, 0 day to expiration options. So I'm just going to show you kind of what that looks like on E-Trade. So let's go into the SPX, right? So we're going to look at just the market just closed. So we're going to look at the following day's options. We're going to look at the 22nd. So what a lot of traders do is they like to go to the money, and a lot of institutions now as well, is they kind of get to the money right here. And you can see that, at the money, there's still a lot of credit to be collected on something like the SPX, which is the largest, cash settled index next to maybe the ES options the futures options for the ES, right? So as far as liquidity and stuff like that, it's really like SPY, SPX, NQ. Those are going to be your liquid instruments, and that's why we show them. But what you can see is if we go to today, which just expired, you can see that all that premium dries up, right? So if you're not in the money at the end of, like, if you're pretty much expiring worthless, right? So let me cut to the chase here and show you. You can see that this is zeroed out outside of the gray area, but let's go here. And this is what apparently happened with the market. So you see all that premium, that's $1,200 on one contract, right? So what a lot of traders do, and even institutions, and there's actually ETFs that are doing this now as well, which I think is a little dangerous personally, but I'm going to show you the strategy that they're actually using tomorrow's expiration. So this would be just like simulating coming in right off the open tomorrow, let's say. Essentially, there'd be a little bit of decay, but what essentially happens with these options trades, and they're really high probability, right? So when you have this kind of premium and you have a lot of retail traders doing this, and you also have institutions doing it, and everybody's hopping on one strategy, and then someone hits the flush, or an algorithm hits the flush, or something happens, it can trigger a lot of people and a lot of institutions, combined with the fact that we are at the end of the year here on Thursday, December 21st, 2023. So you can get a little dicey with some market moves, even in a low VIX environment. So low VIX, low volatility. So the strategy is as follows. So a lot of folks and institutions like to come in here, and they like to, let's say, come out maybe to the 9 delta, somewhere between like 5 and 10 delta. And what they'll do is, let's just open up our trade window. We're going to sell the theoretically the 9 delta, and let's just say that we want to go really wide. We want to collect a lot of premium. We know that this strategy is like a 99% win rate strategy, and that's what we want to do, right? So instead of playing it conservatively and setting up a tight spread with a max loss of 465 and a max profit of 35, which you're almost certainly going to be able to capture a lot of that premium before closing your position, what a lot of institutions and a lot of retail traders are doing is they're going out wider on these zero TDE strategies because they're getting the same probabilities, but they're also getting more credit, right? So you can see the max loss goes up, but so does the credit, right? So this is something that we want to take a look at. So let's actually dive in a little bit on this and look at the snapshot analysis of selling one of these zero DT put vertical spreads. And you can see that, if you think the market's going to go up, which today it did, it started to fill that gap. You might want to get into a put vertical, let's say theoretically, if you're maybe a hedge fund or something, right? Or maybe you're a retail trader and you just want to, maybe get into a high probability strat, right? So what you can see here is if you go wider, you're going to collect more premium, and look at that probability of maximum profit, 98.30%, right? So this is what attracts people. It's the win rate and the probabilities, that you are going to win. Now, what the bad part about this strategy, and I'm going to explain kind of what could have caused this flush, is that the risk reward is absolutely abysmally terrible on selling options premium strategies, not to mention when the market starts to move quickly, like I showed you. Well, you're going to get a lot of people who are liquidating their positions rapidly because, as you can see, the dotted line here represents the current price, and you can see if we're above that price, we're fine. We're collecting our premium. But you can see, you know, if we start to get underwater a little bit, we collected $95, but we might be down. Now, if we get a real big flush, you can see what happens here, right? If we start to go over the cliff and we get a big flush like we had yesterday, you could be looking at losing a lot more money than that $95 premium. And you can see that max loss there could could cause people to close out of their positions prematurely. If you get into this area or if the strike is breached. So my theory, based on years of experience of trading and knowing about these options, is that we had a lot of people trading zero DTE, probably puts, and you're getting people closing out those puts, and then you're getting long puts are staying on the table. Plus, you're getting people shorting a market that was running out of steam at the top, and that's just a recipe, plus tax harvesting and all that stuff, for disaster as far as a zero DT retail trader, getting into a max loss. So that's what I believe caused this scenario. And you can just see that the drawback is the risk reward of this strategy. Now, there's other strategies that you can trade that are a lot safer than this. So go ahead and like and subscribe. I'm going to be getting into a lot of those strategies for you where you can get similar benefits if you have a skew on the market. We're also going to go into if you want to take both sides of the market through iron condors and also call verticals. So getting onto the call side and explaining what all these things are to you, the retail trader. So that's what I wanted to go over today, is what caused that move. And we'll just flip back to Happy Trader, and you can see that we did catch that move. So if you were a debit trader, meaning if you were buying options and you bought puts on that move and you got your signal, which you can set up easily with Happy Trader, right through trading view using this little tool right here, this little ellipses. You just hit the add alert, and then you just set up your buy and sell signals, and then your notifications, play a sound, show a pop-up, show in the app, all that stuff. So, if you did have Happy Trader, you would have caught that move. Same thing with today's uptrend. So that's going to about do it for today's video. I don't want to get too extended and make this into a lecture on zero DTE, but I wanted to explain kind of what that meant. And if you can look up on news outlets, reputable ones about this zero DTE stuff. I don't really like the news a lot, like I said before, but that's really going to do it for today. My name is Ryan, again, from Happy Trader, CEO and head quant. Hit like and subscribe. We are a startup. If you're looking for more of this type of content and someone explaining in layman's terms precisely how you can learn how to trade and what these different strategies are and what are these hedge funds doing and all that good stuff, right? So just go ahead and stay tuned, and we're going to have a lot more content coming for you here on YouTube. Thanks a lot, and happy trading.